today we're going over the next section in the home buyer beginner course. So today we're moving on to standard information on loans. There are more in-depth videos that I have up on my channel. So let's go ahead and talk about rates. So I'm not going to be going in depth about interest rates and how they work. I can tell you that for every 1% interest rate, expect a 10% higher payment. So if your buddy has the same kind of home as you, same price range, same 30-year term, but he got it at 2.5% interest rate, but you got it at 7.5%, well, now you're paying 50% more on your monthly payment than he would be, because that interest rate really does add up very quickly. You can always do what's called a refinance down the road in order to acquire a new lower interest rate, or you could do a point buy down. These are things I would recommend discussing with your lender. Now, adjustable. So adjustable mortgages are not something that I usually recommend for most people. Typically, the times that I've seen these suggested are when interest rates are super high like they are now, but you just know for sure that interest rates are going down. I don't know how you would know that. For all you know, you could lock in here at 7.5%, which is standard as of today of me making this video here in Michigan. And next week it could be 10%, and you would be paying that higher interest rate immediately. So adjustable rate is kind of all over the place. Maybe you could get lucky and get the lower rate. It's super unlikely. You're much better off with what we call a fixed rate loan. So fixed rate, you know what you got. So you locked in 7.5%. Not great, but you know for sure what you're paying every month. You don't have to worry, is it going up? Is it going down? Did I make enough of a payment this month not to get hit with late fees? So one nice thing with this is that you can always refinance. Usually you're going to have to wait at least 1 year, but once those interest rates start going down and you start seeing them closer to like the 5%, okay, well now you refinance, you pay your closing costs again, but now your monthly payment is 20% less or 25% less depending on where you locked it in. So term length. So you can do shorter term home loans. I'm not a lender, I'm not a financial advisor, I can't tell you what to do. I can tell you that for me personally, from my understanding, it doesn't make sense to do a shorter term loan. Now, you don't get better rates from what I've been explained. You don't get better terms. Yes, you pay less in interest over the long term, but as long as you check with your lender and there's not an early payoff fee, you can just pay it off anyway. So if you get a 15-year loan and your payment's $500, or a 30-year loan and your payment's $250, well, you're not required to pay the higher amount every month, but you can always make a bigger payment and still pay it off on the 15-year time span without being required to. So it just lets you have that lower monthly payment, gives you a little more security in case something happens, and then you can always pay up more if you'd like. All right, well, that's it for section 1 on rates. All right, next we're going to be going over standard loan types. I will see you guys on the next one. I hope to see you soon. My contact info is here up on the screen. If you're looking for a home in West Michigan, reach out.